Yeah, you're very correct. The currency swap between Nigeria and China will definitely redefine our trade relationship with China. As you know, for 2017, Nigeria's bilateral trade with China was close to $12.3 billion. And that is a good sum, although one-sided a bit because it's import-driven. But this currency swap, which has been on for like 2 years, is a positive one for FX stability for Nigeria. Now, three very key things I would like to point out in this transaction. It's going to drive convenience, it's going to drive speed, and it's going to drive volume. Volume in the sense that we anticipate that the volumes of transactions in Nigeria will increase based on this currency swap with China.
Okay. You say it's going to drive volume, but I'm wondering how. Is it that more Nigerians will be able to get out loans in RMB quicker so they don't have to go through the hassle of changing first to dollars and then to RMB to complete their trade? Is this like it's an ease of doing business move? Do you expect it to have that great an impact?
Yes, it will have that bit and impact. For last year, 2017, import trade with China was close to 1.8 trillion naira, and the export trade was close to 220 billion naira. So we see more of import trade going up. Banks will begin to position themselves very well to address the liquidity and the operational perspective of these transactions, because definitely the volume of transactions between Nigeria and China will increase with this currency swap.
Now, Robert, help me understand. I'm not sure I've seen any exchange rate for the transactions and settlements under the swap agreement. Do we know what those are going to be? Yes, please.
What we have in this new dispensation is that there will be less pressure on the USD-denominated FX, which we run in Nigeria. So Nigerian businessmen can transact in the yuan or in naira, as it may. There will be less pressure on the FX, which will also drive FX stability, which was the initial intention the CBN had previously when this deal was being conceived.
So what happens when China decides to devalue its yuan again? China has done that in the past to make its exports cheaper in dollar-denominated markets. And we have, at least from the last time we heard, 10% of our reserves were in the Chinese yuan. I don't know if that's more is going to be converted, but what does that mean for us if that happens?
Yes, as you rightly pointed out, there are two things we need to look out for in this transaction, in this deal, sorry. Number one is the exchange rate risk. Number two is the sovereign risk. Number one, most of our export to China is raw material dependent. We need to begin to drive value in this perspective. We need to begin to export processed goods to China. We need to ramp up our export transactions so that this deal will not be one-sided for the country. As it were, we still have that exchange rate risk and the sovereign risk as well as a country.
So you've explained the exchange rate risk. Can you also explain the sovereign risk as well?
Can you repeat that? I didn't hear that.
You've explained the exchange rate risk. Can you also talk us through the sovereign risk?
Okay, the sovereign risks for us as a country, China is trying to internationalize its own currency, and it's going to become something like a legal tender like we have in Zimbabwe, where the Chinese yuan, it's a legal tender. So China is trying to expand the usage of its currency. And for us as a country, we pride ourselves as the biggest market in Africa, populous black nation in the world. We need to begin to look at how this will be to our own competitive advantage, not just for trade with China.
But don't you think we're putting too much on the table? I mean, those are lofty plans by China. Good, fine, they want to do that. But why do we have to commit so much? We don't know if that's actually going to happen. So yeah, why do we have to stick our neck out for that?
Yeah, I agree with you. Lofty plan by China. Remember what I said initially. Number one, we need to ramp up our export transactions to benefit majorly from these transactions. As you know, the Lekki Free Trade Zone is also coming up. We need to position ourselves very well to make sure that we create this hub, an export hub for local SMEs to be able to drive value for our own markets.